Hello, everyone, and welcome back to another Market Outlook presented by SwissBorg. My name is Pietro, and this week we'll be taking a look at, yet again, FTX, because there's a lot of aspects of this story that are constantly unfolding. Therefore, we'll be taking a look at the bankruptcy filing. We'll be taking a look at other domino pieces, so other players in the industry that could be falling because of this FTX situation. And finally, we'll be closing by taking a look at SwissBorg and transparency. First thing I wanted to mention this week is SwissBorg's Twitter space. So we hosted a Twitter space where in total over 5,500 people joined the space with speakers like Cyrus, Anthony, Shane, Alex, other people from the SwissBorg ecosystem or people within their network, let's say, and talking about anything from FTX to the future of the space, what's going on in crypto, and how we can move forward after this latest drama. So extremely interesting Twitter space overall, and this really shows the power of community that is paramount in this crypto industry. So all of the latest news related to the FTX saga have actually come primarily from Twitter spaces, more than traditional news outlets or news websites. And this really shows the power of Twitter in this industry. So please go check out this Twitter space. It's extremely interesting and definitely very valuable for any investor in the space at the moment. So what's been going on with FTX? Of course, by now you will know all the details, either from your online searches or from my market outlooks, from Paula's blockchain brief every Monday. But of course, there's always constantly new things developing in this story, and we want to keep you as much up to date as possible. One of the most important developments, of course, is the bankruptcy filing that is now public, so anyone can go check out the bankruptcy filing. And I wanted to mention a couple of very interesting things that came from this filing. Now, of course, I can't mention everything in this market outlook, so in this segment that I present every week. So for the full details, I suggest you perhaps go check out some of the most interesting aspects online, or even if you want to read the entire thing, of course, that is available online. But for this purpose, I wanted to give the most interesting aspects that I found from the bankruptcy filing. Starting from the fact that in terms of creditors, so in terms of people that are affected from this FTX saga, it is over 1 million people, so 1 million creditors that were mentioned in the bankruptcy filing, which is a pretty huge amount. In this, of these creditors that were affected, a minimum of $3 billion is owed to them, which, of course, is an astronomical amount if you take into account that it just came out that FTX has just shy of $1.5 billion in cash at the moment. That information came out yesterday. Other than how much is owed to creditors, it's also clear that there's still constant cyber attacks that FTX is facing. Of course, it's unclear where exactly they're coming from. It's very speculative what you read online. Some people are saying that it's suspicious, that it might be internal works, but of course, no one really knows. The only thing that's clear is that FTX is clearly being cyber attacked, and the fact that there are still substantial assets missing. This was word by word how it was phrased. The fact that there's substantial assets missing, meaning that either due to cyber attacks, due to hacks, due to any kind of internal movements, it was just found that assets are missing at the moment, which of course is not a good sign at all. What was also found in this finding was that Alameda was actually exempt from liquidation protocol. And this is key because it shows yet again the inner workings between Alameda and FTX, how Alameda got preferential treatment or was just allowed to act however they really wanted. And yes, this filing shows yet again another favoritism, another element of the story that is just, it's incredible. It's really unbelievable that they were exempt from the protocol. Lastly, what I found also very interesting was there's a lot of conversations around hacks. So at some point right after SBF filed for bankruptcy, there was a massive hack that initially was said, yes, it's a hack. Then some other people said, no, it's not a hack. It's actually the security commissions of the Bahamas that seize assets from FTX. Initially, the Securities Commission of Bahamas had actually said, no, we did not seize any assets. But as of the official bankruptcy filing, they've changed their mind, it seems. And now they mentioned, yes, we did in fact seize assets from FTX. This also, it's unclear why initially they would refute this and then agree to it in the public documentation. There's just a lot of elements of this story, as you can tell from the last weeks and from what I'm presenting here, that are unclear and that seem extremely shady. So for any new developments or any new information that comes from this, I'll be able to update you next week. But for now, I thought these were 5 very interesting aspects that concern the bankruptcy filing. Following on from the bankruptcy filing, another interesting aspect to look at is whether there are more domino pieces to fall. So why are we saying this? Is because FTX was one of the biggest exchanges by far in the crypto industry. In whatever metric you're looking at, it's mostly in the top 5 crypto exchanges. And its reach was really astronomical in the sense that it was one of the behemoths in the space. It was one of the largest players. And that, of course, means that the collapse of one of the largest players often leads to other ripple effects. So what are the current ripple effects that we can see? What are other players that potentially can be very heavily affected? So the first we're going to look at is Gemini. And Gemini, as you may well know, is a very large player in the space. It's essentially an exchange. It offers a wallet. It's also a custodian. And most importantly, it has an earn program that was key to its users. Now, as of now, it's said that a large majority of their crypto assets from Gemini are stuck on FTX. At the moment, it's also clear that Gemini Earn users might be heavily affected and potentially never even see their funds coming back to them, or maybe would take an extremely long amount of time for them to see their funds again. Gemini is a very big player, and this should, of course, be extremely concerning, just as the other players that I'm about to mention here. The second is Genesis, and Genesis is actually the biggest trading desk for professional investors in crypto markets. Now, why is it interesting for Genesis? Because Genesis partnered in 2021 with Gemini, and therefore they are interlinked in that sense. They are also now cooperating and working together to get back users' funds, especially from Gemini Earn program. And Genesis, as of now, has suspended redemptions and also asked investors for $1 billion loan to be able to stay afloat and to be able to keep going in the short and medium term. Of course, it's clear that both Gemini and Genesis are affected, and this should definitely be a pretty concerning aspect, at least in terms of domino effects or ripple effects from FTX. There are also a multitude of funds, including here mentioned Ikigai Fund, which is really one of the very large asset management firms in crypto. And they also at the moment have a very large majority of crypto assets stuck on FTX. I just mentioned Ikigai here as it's one of the big names, but there's quite a lot of other funds that are in a similar situation. And of course, these are only the ones that are going public about it. The ones that are mentioning that they have concerns or that they have money stuck in FTX, let alone the ones that at the moment are a bit secretive about it, or it's unclear just how far the effects of FTX have gone in the industry. A lot of people might be quiet about it right now. So in the weeks and months to come, some more players, some more domino effects could be falling or could be having issues. The biggest one here to mention, though, is DCG, Digital Currency Group, excuse me. So Digital Currency Group is a massive player in the industry. It offers institutional funds, market makers, and other entities a variety of services like digital asset OTC trading, lending, institutional lending, can be custody, other kind of brokerage services. So it really the reach extends extremely far, and it's much more concerning than, for example, FTX because of how interlinked it is and was to the rest of the industry. So Digital Currency Group is a key player and a player that we do not need to see fall at the moment. In terms of Digital Currency Group, it's also clear that Genesis is a subsidiary. So Gemini, Genesis, DCG are very interlinked in the issue that is happening through FTX at the moment. And these are really some of the largest names that we've heard since this FTX saga started. and some of the potentially more concerning. As I said before, in next week's market outlook, I'll be able to present a lot more information on just how far these ripple effects extend and how many more domino pieces are to fall. But at the moment, stay tuned, stay informed, and yeah, we'll see what happens in the next weeks to come. Of course, the future, short-term future at the moment is not extremely bright. So the most we can do is keep up to date and stay safe with our funds and with our investment strategies. Finally, this week, I wanted to give a mention to transparency. What is real transparency? Why do we need transparency in this space? This question at the moment, of course, might seem almost stupid, because what happened with FTX is, of course, very clear why we need transparency. But perhaps this is a question that before 2022, the FTX scandal, Luna, Terra, Celsius, etc., before all of this happened, it's not necessarily a topic that was really reinforced as much. Of course, it was a topic that was being discussed in the crypto space, but not as much as right now. And now it's clear that we need transparency. But we don't just need transparency, we need real transparency, meaning that just showing an aspect of your workings or of your business doesn't give the full picture. And this has become clear with the discussion around proof of solvency. So proof of solvency doesn't show, for example, your liabilities. So this topic of proof of solvency, to just be transparent by showing, for example, reserves or assets that are being managed, this is not the full picture. And this is not what real transparency looks like. It's almost as if we're giving a fake signal of transparency, like traditional companies that in this whole sustainability, let's say, trend that's happened in the last years, a lot of companies now are just fitting in sustainability anywhere, ESG anywhere, just to show that they are sustainable, that they are acting in the best interest of society and environment, etc. But oftentimes it's just a word that's being used. And it's the same here. In the weeks and in months and potentially years to come, you'll hear a lot about transparency in the crypto space. But it's important that you understand what is actually real transparency and what is just, we show you a part of our business, but we're not showing you the full picture. And this is where SwissBorg, yet again, is different. So SwissBorg is leading by example by showing the best practices in the industry, by showing what real transparency is, by working with Nansen, a massive name that, of course, you will know, that shows all sorts of data analytics on-chain and in the DeFi space. So working with Nansen, we managed to show our reserves. We managed to show what is actually being held, what is being held in various wallets. But this only shows a part of the picture. Therefore, a blog post was created, and through that various Twitter threads as well, that explains why SwissBorg is safe, why you should trust SwissBorg, and why we are yet again leading by example in the industry, showing best practices, showing what real transparency is, and showing what really any other company in the crypto space should be doing. Following this, if there are crypto companies that are not acting in this way, that are yet again focusing just on proof of solvency, ask yourself why. Because if you want to be truly transparent, you can be. And if you're not being truly transparent, generally it means that there's only really one reason, right? Why are you hiding something when there is nothing to hide? That's all really there is to say. I'll close it off for this week. Please head to SwissBorg's website or to the Twitter, both the Twitter space and the Twitter profile, to go check out this blog post. Extremely interesting, and will finally give you a full overview of what's going on and why we are so safe and how to be transparent. For the rest, I'll see you all yet again next week for another market outlook. I hope it's been informative. Thank you very much for listening, and take care.